Hello, 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 everyone. Happy Wellness Wednesday. Hope everyone is doing great today. Let me know who's joining here in the chat and be sure to like, subscribe, and share with everyone you know. Hi, Jen. Invite some friends, girl. So yay, more people are coming in the room. Let me know who's here today. Excellent. I always like to send out a little friendly reminder. So, welcome in everyone. If you are joining for the very first time, I would like to welcome you to your new home for financial wellness. My name is Mia James, and I'm your financial wellness coach. And I discuss finances from a feminine perspective. So, I like to lead from the heart. And I will also be breaking down financial concepts so you can be fierce and fearless with your finances. Special shout out to my FFS sisters. So don't forget to like, subscribe, and share this channel with anyone you think can benefit from this information. And I'm just here to just share. Okay. So you all know we didn't learn financial literacy in school. And if you did, you are very blessed and fortunate. Let me know. And I'm here to just make sure we understand the basics. And then if we need to, we just up level. So if you're here today, you really want to know about taxes and how to maximize them. So here's a disclaimer. Okay. I am not a tax expert or a tax specialist, but next week I am having my tax strategist to come on. She is a phenomenal woman and she will be on next week. Okay. So today I'm going to talk to you all about, I've been taking a bunch of tax classes lately and I'm a sharer. Like if I know something and you need to know the answer, then I'm going to share it with you. So the reason why I care about taxes is number one, I'm a taxpayer, y'all. Anybody else in here a taxpayer, right? But I'm also a business owner, and there are many legal ways that you can pay less taxes, and it's all in the tax code. So, of course, I'm not going to be before y'all long, putting up the church figure. So let's jump right in. So, as I mentioned before, y'all, my mama is asking me for the link again. Okay, hold on 1 minute. It's always my mama. I gotta just remember to send her the link ahead of time because she could not find me on YouTube. Okay, but she likes to come and she likes to learn. So we got to get mama in the room. So let's get her on, and then we're gonna jump in because I know we got some of us have book club and all of that. So, like I said, I've recently taken several classes on taxes, and I want to share with you what I learned because it was definitely mind blowing. Okay. I was like, oh, I can do this, I can do that. And I know a lot of stuff, but you know what? The tax code changes. So that's why I stayed up on these classes. So I want to share a summary with you, but I want to break this down into two parts. So this week we're going to go more general. So this is for anyone. Next week we're going to be focused on business owners and tax strategies. So I will be introducing you to my tax strategist, same time, same place next week. So if you filed, so let's jump in, get your pen, papers, whatever you need. Hey, Keitra, yay. Hey, Andrea, woo woo. Nah, Jen, it's all good. It is all good. Hey, Andrea, wonderful. Good to see you. Let me know who is in the room. I like to give you a shout out. Thank you for coming. And again, just feel free to share with whoever you think needs this information. Okay, so we are going to jump right in. Okay, so first, something you should know if you were an early filer, the IRS did not start processing taxes until Monday. So if you filed before Monday, they didn't look at it until Monday, started looking at tax returns until Monday. So that's just important to know. If you were like, oh, when are they going to start? That's when they're going to start. If for whatever reason you need an extension, so let's just say you're a new business owner, maybe your receipts and your information is not yet together, then you have to file form 4868 by April 15th to request an extension. Now, this will give you a 6-month extension to file, but that does not extend your time to pay taxes. So if you owe, you still need to pay by April 15th, okay? But you want to talk to a tax professional about that, okay? And they can kind of give you some more guidance on what that would look like for you. Also, something that was important to me that stood out is that you want to keep your tax returns for at least 3 years. I mean, I have mine was way back because, who knows, but at minimum 3 years. Okay. And then another thing that that stood out to me from the class is whenever you have life changes, you want to make sure that you change your W-4. Yeah, that's what I said too, Jen. So Jen is asking not 7. So that was a question that came up in the class that I took as all right. Okay, so I know my internet went out. Yes, you are right. So they do charge a fee. Okay. Hopefully I'm back. I'm having some internet issues. We are working through them as we speak. So hopefully everyone is still here. Okay, I guess a couple people dropped off. No worries. We will keep on going. Thank you for that information, Mama. So my mom is in the tax world as well. So okay, thank you, Andrea. Yes, I am finally back. Okay, so let's keep going. So anytime you have a life change, so what is a life change? You get married, you get divorced, you have a child, you buy some property. Any type of major life change, if you are employed and you fill out a W-4, anytime you have a life change, you want to file a new W-4 to make sure that they're taking out enough taxes and things of that nature so you don't owe. So that was also something very important because sometimes, you could set it and forget it, right? You do your W-4 one time and then you don't update it unless you're kind of aware, but sometimes we're not. So definitely make sure that you update that. Another thing that I learned, have y'all heard about 1099Ks? Let me know in the chat. Oh, okay. We got a question. I like a question. Okay, so Jen, a W-4. So when you are employed, right? And you get your W-2s at the end of January, beginning of February, the document that you fill out that informs how much taxes will be taken out from your W-2 is the W-4. So that's what you do when you first get a job. You first start working there, you fill out a W-4. But a lot of people don't know that you can actually change a W-4. My mama taught me that because my mom is a finance professional too. So if you want less taxes taken out, you change your W-4. You want more taxes taken out, you change your W-4. You have some more kids, you change your W-4. So talk to your payroll people. You can get a copy of, you can get a blank W-4, and then you can actually get some assistance from your tax professional. Yep. Okay. Excellent. So, yep, you knew you could change it. Yep, you sure can. Excellent. So, in terms of it's not a percentage, it's more so like your withholdings. Okay. And so, to answer, my mom's answering the question for you because this is her lane. So, she said that the IRS website has a tax estimator to help you determine what to put on your W-4. So believe it or not, the IRS website is actually very helpful. I consult it all the time when I know something in the back of my mind, but I just want to make sure that I'm on the right path. So definitely use that the IRS website, the tax estimator, because it is a really great tool. I have used it many times. Thanks, Mom. And then Andrea says, let's see, use an estimator to prepay what you think you will owe with the extension. And then, that's excellent. So Andrea says her tax preparer company automatically filed her extension. That is wonderful. So Miss Pixie Chicks over here, her name is also Andrea. She was saying that she heard it was good to switch every 6 months. Now, I've never heard that per se, but what I will say is that if you have a major life change, then it's good to change it. Like, you don't want to just go in there and change it without, a good reason. But definitely if you have a change, like even in change in status, right, with your job status. Mom, Jen says, thanks to you, Mom. Awesome. See, look, everybody in here has a lot of wisdom. I love it. I love it. So let's keep going because I have a lot to cover today. So I want to make sure we get everything in there. So I started talking about 1099Ks. This is new and it's quite crazy. Okay. So a 1099K is going to be issued for any of us that use PayPal, Zelle, Venmo, Cash App, Fiverr, and Upwork. Anybody use any of those things besides me? I know I use pretty much all of the things. Okay. Now, here's the deal. And this is they're still kind of working through it. It's fairly new. But basically, if you receive a 1099K from PayPal, Zelle, Venmo, Cash App, Fiverr, or Upwork, you have to report the income on your tax return. But here's the thing. Some of those transactions might be personal and some might be business. So what you want to do to kind of preemptively prepare yourself for that, I know this is like real crazy. Hey, Cheryl. Is what you want to do is you want to start to distinguish what transactions are personal and what transactions are business. Because that way, if any like say for example, you're zelling someone on behalf of your business because you're paying for something business related, you want to make sure you get that as a tax write-off, right? Not in, or somebody is paying you, then you will put that down as sales in your business. So you do want to start preemptively looking at your Zelle, your Cash App, your Venmo, and all of those things to see what those transactions are. So one thing that the teacher taught us in the tax class, she said, basically have people to write in the memo what the transaction is for. Okay. So for example, like my husband just Zelled me some money. So he just put a little something in the memo. So we know that it was a personal transaction versus a business transaction, right? So that is going to be so important moving forward. Anytime somebody Zells you, Venmos you, ask them to just write in the memo what it's for. So that way, when you are trying to get prepared for your taxes, you already know ahead of time, okay, that this was business, this was personal, and what it was for. So it'll make things a lot easier. So I know that's a lot of extra work, but at the end of the day, we want to be prepared, okay, because those things are coming down the pipe. The government is all in every type of income transaction nowadays. All right, so let's keep going. So now I'm going to share my screen and I want to go over with you the 1040 tax formula. So if you're like, what is the 1040? That is like the main tax form that we all use, okay? So what I'm going to do is share my screen and I am going to, okay, my mom says, be very careful if you enter an amount for dependent credit on your W-4. You can end up having not enough taxes withheld from your wages and can possibly owe the IRS. So that's why those those tax estimators on the IRS website are very important before you make changes to your W-4. All right, so I'm going to share my screen. So I'm going to be looking to the other side because I have another screen. And we're going to go over the 1040 tax formula, okay? Because I want you to understand, the goal of today is to understand how to maximize your adjustments, your credits, and your deductions, okay? Because that's how you bring your tax liability down. So let's see here. We want to do share screen. Yes, it is easier with two monitors. Okay, let's see here. Boom, I think we are cooking with gas. Okay, let's make it bigger. So I will be looking to the side because I'm going to use a bigger screen. All right. Yes, you all can see it. Oh, let's see if we can make it bigger. Let's see, 150. There we go. Okay. So if you need to screenshot this or what have you, feel free to do so. Ooh, this is really great to use two screens, y'all, because I can see y'all over here and then my example over there. Okay, beautiful. All right, so we're cooking with gas today. All right, so the first thing is gross income. So that just means any income that you get before taxes. Then after that, they're going to subtract any adjustments. So what is an adjustment? Okay, I want to make sure we're all on the same page here. So adjustments, these are some examples of adjustments. And again, I told you I'm not a tax professional, but I have done some research for you all. So alimony payments are adjustments, educator expenses. So shout out Jen, I know, write down all those educator expenses. Certain business expenses, right? So if you are like, a performing artist, any fee-based government officials, any deductible HSA contributions, deductible IRA contributions. If you were in the military, any moving expenses, deductible self-employment taxes. So those are some examples of adjustments. Okay. So if you heard anything that applies to you in your situation, make sure to include those, right? And maybe even do some research on your own or ask your tax professional if there's any adjustments that you qualify for. So once the adjustments are subtracted, that's going to leave you with your AGI, your adjusted gross income. So you'll hear AGI used quite a bit. Then you are going to subtract either your standard or itemized deduction. So the question here becomes, should you use the standard deduction or should you itemize? So it really just depends on which number is higher. Okay. So let me see. Did I pull it up over here? The standard deductions? I did not. Okay. So basically, there is different standard deductions. I don't want to go too deep into the weeds. Let's see if this is going to do it for me. I want to do the standard deduction chart so you can see. Okay, there we go. Let's see if you all see what I see. Okay, nope, you don't. All right, so let's do this, and we're going to share it again. Okay, I want to do a window. And I want to do, is this it here? I think this is it, prayerfully. Okay, so I think you all, yeah, you do. Okay, so of course, there's different filing statuses, right? So let me see, what year is this? Yeah, this is 2024. Okay, so let's make this a ski taste bigger. Of course, I don't know how to do that fast, so let me just read it to you. Okay, so what this is saying, this is from the IRS website, of course. If you are married filing joint, the standard deduction is $29,200. Head of household, $21,900. And single or married filing separate is $14,600. So if you are married, it's best to get this do married filing joint because you get the biggest standard deduction. Oh, I was frozen. Oh, this internet. Okay. So I was just saying, if you're married, it's better to do married filing joint because you get a bigger standard deduction. However, if you have the option to itemize, and let's just say in my case, I'm married, right? Married filing joint. If my deductions are greater than $29,200, then guess what? Mia is doing itemized deductions. Okay. So what are some things that you can itemize, right? So things that you can itemize are like, now this is also subject to certain dollar amounts, okay? But I'm just giving you an idea. Certain things could be like state and local income or sales taxes, real estate property taxes, personal property taxes, mortgage interest, disaster losses, gifts to charity, and medical and dental expenses. Okay? So if it, again, depending on where you fall in this category, if you're single, then anything above 14,600, if all of your itemized deductions are like, say, 16,000, then you want to itemize. All right, so let's keep going. And if my internet goes out, know that I'm coming back. Okay, so we talked about standard or itemized deductions. So once your adjustments are pulled out, so make sure you're getting all your adjustments. Make sure you're getting either your standard or itemized deduction. And if you're married, you get a bigger itemized deduction if you file jointly. Then you have your taxable income. Okay. Now, in order to calculate your tax liability, what they're going to do is they're going to then subtract any non-refundable credits. So basically what a non-refundable credit is it's a reduction in amount of income taxes that you owe, but it'll only bring your tax liability down to zero. It won't create a refund. Okay, so hopefully that makes sense. But basically, like, non-refundable means you can't get the money back for it. So they're not going to give you a refund if you have a non-refundable credit. That's all that it means in simple terms. So here are some examples of non-refundable credits: Savers credit, lifetime learning credit, adoption credit, foreign tax credit, mortgage interest tax credit, elderly or disabled credit, residential energy efficient property credit, general business credit, alternative motor vehicle credit, and credit for holders of tax credit bonds. Okay, so I know I'm going pretty fast, but I know some of us got book club soon. So they'll subtract that out. And if this number, so depending on what's here, this is your net tax liability. And then what they're going to do is they're going to add in any refundable tax credits and any tax payments. And if this number is negative, you get a tax refund. If this number is positive, you owe. Okay. So let's keep going. Let's see. Let me check the chat real quick. Everybody okay out there? I know this is a lot of information. You could definitely watch the replay. But this is just the basics for today. Okay. So let's see. So Andrea says she recently went to change her W-4 as her daughters are no longer dependents. She read what my mom referenced, and there may be a penalty if under allocated. Exactly. Yes, you don't want to underpay taxes too much either. So that's why using those IRS tax estimators is going to come in handy. Okay. So that example that Andrea just used, she had a life change. Her children are not dependents anymore. So it's very important that you are updating these things here and there. Okay. So let's keep going and finish and wrap this part up. Of course, I had a lot more to tell y'all, but I just want to quickly break down refundable versus non-refundable tax credits. Okay. So if you qualify for a refundable tax credit, you'll receive the entire amount of the credit. But if the credit exceeds the amount of tax that you owe, you'll receive the remaining amount. So let's say you had a $2,000 refundable tax credit, but you owe $1,000 in taxes. Basically, then you'll get $1,000 back if you had a $2,000 refundable tax credit. Also, even if you don't owe any taxes, you can apply for and receive a refundable tax credit if you qualify. Okay. And each tax credit has its own eligibility requirements, right? And so this can include income levels, family size, and whether you earned income or not. So that's very important for you to know too. So let's wrap this up and take it on home for tonight, because I know I gave you a lot of information. Again, next week, come back, same time, same place. I'll have my tax strategist on, and we'll be talking about it from a business standpoint. Even if you have a brand new business, you want to start keeping track of your records accurately from day one, because the minute you start the business, the minute you start spending money on a business, you have created tax write-offs. So keep every receipt, no matter what it is, because you can start, if you started your business last year, you can do your business taxes this year. I am with Andrea 100%. This is my philosophy too. I prefer to break even and not have a refund, because basically the government is just using my money to make money, right? Or whatever they're doing with it, God knows what, at this point. But I don't really prefer to have a refund, truth be told, because I could be using that money to invest and do other things with it. You are most welcome, my darling. You are very, very welcome. So let's wrap it up. Let's bring it home with this formula over here. So refundable tax credit, we just went over it. Did I give you examples? I don't think I did. Hang on. Oh, it's right here. Okay, here we go. So here are some refundable tax credits. So there's earned income tax credits, child tax credits, independent. Let's see, American Opportunity Tax Credit for education expenses. So this is actually all on the IRS website, and this is how it helps your refunds. I actually, like I said, I really do like the IRS website. It's very user friendly. I don't, they did a good job on something. So let me drop the link in the chat for you. Oh, I lost you guys. Where'd you go? There it is. Okay. In case you want to be able to look it up yourself. I didn't get it. I'm not going to be able to go over this tonight because we only have a couple minutes left, but I did want you to at least read this page on your own to understand your tax bracket, because tax brackets are not equal. Okay. It's not just like one number. Your income is actually broken down in sections. So just so you can see here, this person, if they earn $58,000, from 0 to 11,600, the portion that's taxed is 10%. From 11,600 to 47,150, this portion is 12%. And then the amount from 57,150 to 58,000 is 22%. So you can have multiple tax brackets. You can actually be in all, 7 tax brackets, honestly. Yep. And so my mom said this is why the IRS changed the W-4 in January of 2020, because people were under allocating taxes. So let me drop this link in the chat just in case you want to understand tax brackets more. But a simple formula for understanding what your tax bracket is, all you have to do is divide. You can get your last tax return and divide your total tax that you pay by your taxable income. That's your tax rate, and multiply that by 100. Okay. So I'll just drop that little tidbit in the chat, and I'll actually tell you where to find those numbers on your tax form. So if you want to copy that from the chat, this is how you can calculate your effective tax rate. Okay. So it's in the chat. So any last minute questions? I'm going to stop sharing for now and see if there's any questions. Again, like I said, this is just some information that I learned in the last couple tax classes that I've taken, and I just wanted to share it with you all. Oh, okay. So great question. So Jen said, where can you view your current W-4? It's going to be in your payroll portal through your employer. Yeah, it's through your employer, through payroll. Yep. Great question. Anybody else have any last minute questions before we head out tonight? Let me know in the chat. Was this helpful for y'all? Anybody learn anything new? Let me know if you learned something new tonight that you didn't already know. No? Okay, well, hopefully someone has learned something that they didn't already know. But please definitely share this information with people that you know. Excellent. Thank you, Andrea. I'm glad it was very helpful. Yes, good. I'm so glad to hear that. And thank you, Mom, for being super supportive and helping out in your area of expertise. That's what I like to hear. Yep. And you can change your W-4 at any time. So that's important for you to know. Any life changes, make sure you update it. Okay. So same time next week, I'm going to have a tax strategist on with me. Yes, I know, Jen. It's a lot of stuff we don't know. We don't learn this stuff in school. I want to make sure people know this information because it can really save you some money in the long run. All right, my loves. Well, thank you for sticking and hanging in with me. I'll see you next week, same time, same place. And please invite people, especially business owners who you could be new to business. They can be in business for a long time, because I'm going to have a tax expert, tax strategist on next week, same time, same place. And I want to fill the room, get your questions answered to make sure you as a business owner maximize your taxes. Even if you just started your business last year, if you spent any money on your business, you definitely need to be here. All right. Well, thank you for coming, and I will see y'all next week. God bless y'all.